So you're still sitting there thinking, should I buy? Should I not? Is the market going to crash? What's going on with things? So let me put everything in perspective. My whole goal on this channel is to teach you real estate, especially all your financing options. But what I thrive to do is to be able to provide you the facts, the unbiased facts, the content where I got all this information. It's time-stamped, and you'd be more than happy if you fact check me. Okay, so that being said, let's see how the housing market's doing right now in regards to sales. Okay, and then the next thing I want to see is, how is the mortgage industry? Is it solid? Are a lot of people going into foreclosure? And those are the two things we're going to talk about next. So a lot of the information that you see is, you're like, okay, home sales are declining. See, told you guys the market's the world's going to crash. Houses are going to go, everybody's going to get foreclosed on. House values are going to plummet and everything else. Now, let's read between the dotted lines here. Okay, so let's go into this report and let's see what's really going on here. All right, so new single family home sales declined by 8.6% in March, according to the data released today by the Census Bureau. Okay, so unless the Census Bureau is biased to home ownership, that's you decide on that one. That seems like a fairly substantial shift, but in this case, the total annual pace of 763,000 home sales was right in line with forecasts of 765. Okay, so what's causing some of this to happen? Well, sales continued to run above pre-COVID levels. So a lot of people are saying, well, because the Fed basically plummeted rates, that's why everybody's buying houses right now. Well, that's odd, because sales continue to run above pre-COVID levels. Okay, so that's one I want you to look at. Inventory improved to 406,000 homes from 385. I want to show you something I learned just today on this that's really intriguing. But we can see sales remain in solid territories despite another record high of median prices. Another record high of median prices. So when it says a decline of 8.6% in the number of homes, it didn't say anything about the prices. It's actually saying the prices continue to rally at its sharpest pace since the 80s. Okay, so the general trend remains positive. And I know it can be a great trend all the way until the point the train runs out of the tracks. But this is the data that we have today. So here's what we see in this area right through here. You can see new home sales. The trajectory is nice. Okay, yes, there is a spike here, but we're coming back down in line. This would be the normal progression on how things should go. Now, why they didn't put a line in here, I don't know, but let's throw a line between the prices. So we start down here and let's put a line through here. So basically the prices should be right in here. So we are probably 10 to 15% inflated. Okay, so I don't see the values coming down to here. Do you? I see the line, if we came into the norm, we'd be right in this range here. Okay, but only time's going to tell. Here's one weird situation. Let's explain more about the inventory is improving bullet point that a lot of people have. So they're saying 406,000 homes are in the inventory. Well, are there really? So we break it down, and here's what we got. Of that 406, we have 110,000 hasn't even started. They haven't even started construction on these yet. So there's 110,000 that really can't be accounted for, I guess. 260,000 still under construction. So between just maybe kind of getting there to be started and in the middle of being constructed, we have 370,000 homes, okay, of the 406 in inventory. That's a huge piece of that puzzle. Okay, so please, if you want to fact check me, I would love even to post some details or links down below, URLs, whatever you can find, letting me know how a lot of people are saying it's not an inventory issue. I'd love to read them. I can even read them loud, and I'll do a video in regards to that topic as well. But another area that I want to talk about is a lot of people keep saying, well, this whole debacle is based on investors. Investors are coming up, buying up at least 50 to 75% of the market. Well, CoreLogic just came out with a study saying that as of October, investors have started slowing down their pace. It wasn't a big decline, but right now investors are buying about 20% of the market. Okay, it's not that's still a substantial number, but it's not the 50% or 70% that a lot of people claim. And I know a lot of people are going to respond to this saying, oh, these numbers are false. Then guys, please give me a URL down below with the facts. That's all I ask you to do. I'm more than up for a debate, but I'm not going to debate with some, just with hot air. Down through here, you're going to see who's buying these things. Well, it's mostly huge investors, large investors. What is defined as a large investor? Those that have 100 or more properties. Okay, we're at about 26% of the market. Now they're at 20% of the market. Okay, so that's that piece of the puzzle. The next thing I want to uncover now, this gives us an insight of how house prices are coming, how the demand is, how many are in inventory, and everything else. But another thing I see all the time is foreclosures. Foreclosures are going crazy. Well, what's the facts? Well, bigger than normal, and this is April 25th at 3:32 p.m. So this isn't a dated report. Bigger than normal drop in mortgage delinquencies. Okay, mortgage delinquencies hit a record low in March. Okay, a record low. That's all we got to look at right there. Why? Why are they at such a low? This is the question that I always want you guys to ask and hopefully, or you answer. Well, it's what I've been repeating for the last year and a half. A good job market, which I think can even get better. Continued student loan deferrals. So if you don't have a student loan, that's going to free up a bunch of cash. Strong performance following forbearance. So a lot of people who took a forbearance meant that they didn't have to make a mortgage payment of up to 18 months. So you had a lot of people that were in that program and in this program, the student loan deferrals. Okay. And then most people did, or that had the ability to refinance during the last year and a half at record low rates. So this is helping the economy tremendously. Okay, so let's break down the mortgage delinquencies. The strongest improvement was among those who were one payment behind or 30 days delinquent, recording a 20% month-over-month decline. Okay, so that's in check. Well, how about those that are almost on the brink of foreclosure? Great question. Well, that fell 12% from the strongest month for the strongest single month improvement in 20 years. Okay. Despite elevated serious delinquencies, foreclosure starts fell by 3% for the month of it. So we know, let's put this in, let's summarize everything that we have here. We have low inventory, which we know, but a lot of people are naysayers. Again, please don't debate me. Just put the URL down below on what you want me to research. And I will be more than happy to do a video on anything I do find that contradicts this information. Okay, so that's one. A lot of the inventory is still being built. Okay, that's two. A lot of investors who are buying, they're buying now at about 20% or lower a piece of the market. So they're only buying 20% of the market. That's still up substantially, but it's not the 50 or 70% that a lot of people claim. But again, a lot of this information is regional. So if you're in parts of, like I go to Myrtle Beach and go golfing all the time, you go down there and they're building like crazy. Well, I go back to my hometown of Fallsby, West Virginia, and they aren't building anything. I'm not putting them down, but it's apples and elephants. So when you generalize everything, saying the world is ending and the U.S. economy is crashing and house prices are going to be worthless, that's not fair. Okay, so that's that piece of it. And then we look at delinquencies. Now that everybody has to make mortgage payments, forbearances are over, and student loan deferrals are starting to end, hopefully. What's that going to do for mortgage delinquencies? Well, we just had one of the best months ever. So hopefully I'm debunking some of these fears you have. But can mortgage or home values go down? Yeah, they can. Are they going to crash? They shouldn't. And I'm providing you all the technicals behind it, but I'm not FOMOing real estate. If it's time for you to buy a house, God bless you. Make a financial decision. My take on it is, if I wasn't going to stay in that house at least minimally 3 years, I would not buy a property. Okay, that's my take on it. Why? Well, you're going to gobble up a lot of costs just in the buy and sell transaction, and then if house prices do go down a little bit, you're going to lose. 5 years, 8 years, 10 years, you got it. So that is my report for today. So again, I don't want any arguments down below. You're more than welcome to debate me, but what I don't want is just generalizing is a market's going to crash 30%. Rates are going to go to 15%. Guys, please give me substance that we can, I can do my research, come back and say, here's what I found. And if you can prove me wrong, God bless you. But you probably can't, unfortunately. But I would love the debate. I would love the feedback. So please post down below. There is also a lot of content down below for you guys to get. You can sign up for my newsletter. I have a Credit Scores and More website now that I created that you can go there and get your credit reports and a whole bunch of other things, nifty things. And there's other tools down there, especially the HomeBot. HomeBot is a home valuation system that you plug in your address in there and it gives you all kind of data, and you can find that on my website. So I know I threw out a lot of stuff here, guys, but I appreciate you guys watching because, again, the goal of the channel is to educate, inform you everything real estate, especially when it comes to the financing. So thanks so much for watching. God bless. If you want to check me out or my team, our website is down below. You can apply online. You can chat with us. You can call in. We'd love to help or answer any questions that you have. So thanks again for watching. I'll see you soon.